Hello everyone, welcome back to the channel. In this video I'm going to talk about the concept of pocket pivots. What will be covered in this video, what pocket pivots are exactly, why they can be very helpful in your trading strategy, where they come from, and how to use the ChartMill stock screener in order to find the best pocket pivots buy setups. Let me start with a question. Which one of you already uses them in their trading strategy or has already had some sort of experience with it? Please let me know in the comment section below. I'm very interested in your answers. And while we're at it, please like this video, subscribe to our channel and press the notification bell to be notified when new videos are released. It will help this channel tremendously. Simply explained, a pocket pivot is a price volume pattern that may indicate that large institutional players are interested in a specific stock and may be buying in. Such large market players will typically try to buy in at an early stage. That is, when the stock price shows little momentum. The best conditions for this are stocks that have been moving sideways for a long time with relatively low volume and within a certain price range. Another alternative are stocks that have had a first limited price increase and then move sideways with declining momentum. If there is a consensus among investors that there is much more upward price potential, then the interest in buying will also increase sharply. To identify a valid pocket pivot, the following technical parameters are used. First of all, the buy volume of the last bar or candlestick must be higher than the highest sell volume of the last 10 days. I repeat, the buy volume of the last bar or candlestick must be higher than the highest sell volume of the last 10 days. And second, the price has to be relatively close to the 10-day moving average. This is mainly to avoid buying after the stock price has already risen very sharply in one quick movement. Typically, in that case, you will see a price chart where the 10 SMA is quite far below the price. In our stock screener, it is possible to change the max percentage offset from the simple moving average. For example, if you set this to 3%, only blue dots will appear if the closing price deviates a maximum of 3% from the 10 SMA. Stocks suddenly breaking out with significantly higher volume than usual are of interest to individual investors like you and me, especially if there is a slight chance that a higher volume is caused by institutional investors. These are major opportunities to enter the market with relatively small risk. Take a look at the Zoom share price from October 2019 until the end of January 2020. During that period, the price clearly went sideways and the volume was relatively low. The price remained close to the 10-day moving average. Suddenly, on 6 and 15 January, two pocket pivots appear on the chart. However, the price is still within its existing price range. On the last day of January, another pocket pivot suddenly appears. In other words, three pocket pivots only in the month of January 2020, whereas none have been shown since September 2019. The next trading day, the stock price breaks out and rises by almost 15%, with very strong momentum and big buying volume. The closing price at that time was $87.66. The current all-time high is at almost $589. So that's why it's a good idea to keep an eye on those blue dots. The terminology pocket pivot comes from the book Trade Like an O'Neill Disciple by Jill Morales and Chris Kacher, and they have backtested the concept extensively since 1920. It is important to realize that this pocket pivot strategy goes a lot further than just the technical analytic part, something that is often overlooked when reading many other articles on the internet. Indeed, an important part of this approach is based on fundamental analysis. The book emphasizes, for example, strong quarterly figures, outstanding profit margins, return on equity, growth in turnover, and so on. Their backtest showed that pocket pivots in strong leading companies had a higher success rate than the weaker ones. If, therefore, the presence of pocket pivots is screened purely on the basis of the price volume definition, many of them will fail to meet the fundamental conditions that form the very basis of the strategy. And later on in this video I will show you how you can quite easily combine the pocket pivot screen with fundamental parameters to establish a select group of potential buying opportunities within ChartMill. In the description below, I added a link to the book. It is an absolute must-read if you are interested in examining their strategy and trading principles in detail. The pocket pivots are shown as an overlay on the chart in the form of blue dots. In the chart tool, first enter the ticker, then click on the plus sign and select the option Select Overlay to add for the pocket pivots. Tip: if you press the letter P, you will see the first indicator that starts with the letter P. The pocket pivot overlay has two options: the length of the simple moving average and the maximum percentage that the price may deviate from this SMA. We leave the simple moving average at 10 by default, as a 10-day moving average is used. I set the standard deviation at 3%, but remember that you will only see the pocket pivots of which the closing price for the corresponding price bar deviates by no more than 3% from the 10-day moving average. I use Microsoft's daily chart to show the difference. First, I am going to change the view settings so that I can place two daily charts next to each other. Then I add a 10-day SMA on both of them, which is the green line on the chart. On the first chart, I add the overlay pocket pivot, being an SMA 10 and a standard deviation of max 3%. The blue dots that appear on the first chart indicate all the corresponding pocket pivots. So these are the bars or candlesticks of which the buying volume is higher than the highest sell volume of the past 10 trading days, and of which the closing price deviates max 3% from the 10-day moving average. To show the difference, I now add a pocket pivot overlay on the second chart, but this time with a standard deviation of 5%. So in this case, the closing price may deviate maximum 5% from the 10-day moving average. However, the condition regarding the buying volume remains completely the same. You immediately notice that on the second chart, more pocket pivots appear than on the first chart. This is due to the fact that in the second case we allowed a larger deviation from the 10-day moving average. First, I will highlight the screen options as far as the pocket pivot itself is concerned. After that, I will show some screens in which we combine the pocket pivot filter with some fundamental filters to get the best candidates. First, we select the stockscreener tab. In the next screen, you choose the tab Performance, and under the menu Signal there are several options. Pocket pivot today, at least one pocket pivot in the last 5 days, at least two pocket pivot in the last 5 days, or at least 3 pocket pivots in the last 5 days. For the first option, ChartMill will only hold the stocks where, based on the closing price, a pocket pivot is visible. Just like in the regular stocks charts tab, to actually see the pocket pivots in the price chart, you have to add them as an overlay on the chart. To do so, select the main chart tab. To start, set the max percentage offset from SMA high enough at 5%. Later, you can still reduce this if you want the price to be closer to the 10 SMA. At the same time, for the sake of clarity, I am adding a second overlay, the 10 SMA. The other screens speak for themselves, and of course you can also make combinations. You could, for example, select that there must be at least one pocket pivot in the last 5 days, but also set a condition that there must also be a pocket pivot today. Combining these pocket pivots filters with some additional fundamental filters is where the real strength of our stock screener comes into place. Under the tab Fundamental, on the first row, 6 fundamental rating tabs are visible. The first one is a general fundamental rating. The other 5 highlight a specific aspect, in this case the company's financial health, growth, value, dividend policy, and finally profitability. You can set the minimum value for each category and thus put more weight on what you consider more important. For those of you who are familiar with all these fundamental ratios, can choose in this screen not to use the fundamental rating steps, but to set the filters individually. At ChartMill, we even have the Altman Z and the Piotrowski F-score available for screening. To show you the power of the screening possibilities in ChartMill, I will now create a pocket pivot screen from start to finish, combining general basic filters, technical filters, and additional fundamental filters to obtain a select number of potential buying candidates. Under the General tab, I first select a few general basic filters such as the market on which the stock quotes, minimum price, and minimum volume. The number of stocks retained with this initial filter goes from just over 19,000 worldwide to approximately 2,000. Next, under the Performance tab, I select the option at least one pocket pivot in the last 5 days. And remember, to see all the pocket pivots on the chart, I add the overlay and set the max percentage offset from simple moving average to 5%. I also add a 10-day simple moving average. Depending on the size of your screen and your personal preference, you can also decide to display multiple chart results next to each other. Under the tab Indicators, I use the MACD filter to point out that the MACD indicator must be above the 0 line. And finally, we add a fundamental rating score. I select the Fundamentals tab and set the rating to 7 out of 10. If the number of candidates suddenly becomes too small due to the filters, you can, for example, adjust the fundamental rating score to a 6 out of 10. I myself add one last filter for potential buy setups, namely the 200 daily moving average. Via the tab Performance Price versus SMA, I select that the current price must be higher than the 200 simple moving average. This way, I know that the long-term trend is positive for all stocks on the list. And as a result, only 18 candidates meet the criteria with these filters. If I check the results very quickly, Davita Healthcare and Maxim Integrated, for example, both seem ready to break out. Bright House Financial is also getting ready to overcome an important resistance. The nearest resistance, however, is already at $38. It may be clear that screening this way leads in just a couple of clicks to a nice selection of stocks, which you can take a closer look at manually to see which setups you prefer. As I always point out in these videos, you should never rely blindly on any indicator or trading concept. And this applies as well to the pocket pivots that I have presented to you today. So in your analysis, also take into account other elements that support your bias. And remember that selection and timing are only two parts of a successful strategy. Sound risk management and the way you manage open positions are at least as important. Be sure to watch the video in which I explain 2 successful exit strategies. I put a link in the description below. That brings us to the end of this video. Your remarks and ideas are welcome in the comment section below. I am really looking forward to it. So if you like this video, be sure to give us a thumbs up, and if you haven't subscribed yet, please do so. It really supports the channel so we can make more videos for you. Thanks for watching. Trade safe.